South Korean stocks are on a rally, with the benchmark KOSPI climbing past 3,400 this week for the first time. For more on this, we're joined by Professor Shim Myungkyu, Associate Professor of Economics at Yonsei University. Professor Shim, thanks for joining us this morning.
Thank you for having me.
So this week, the government scrapped its plan to lower the capital gains tax threshold for stock investors, keeping it at 5 billion Korean won, and that's about $3.6 million, I believe. So is this the main factor driving the current momentum in the stock market?
Yeah, given that there was already a rally of the KOSPI index from weeks ago, the change or the stance in the government policy might not be the only main factor driving the stock price rises, but I think that can be treated as the important factor. It seems to be an important change, however, since it provides the signal that the current government, together with the president, is flexible enough to scrap the policy that it really intended to impose before. I expect that it definitely helped the market. In the business cycle theories, investors or consumer sentiments are believed to be one of the most important factors that can drive the stock market and the aggregate activity. In this sense, the stance of the government seems to relieve the market concern that it might be the kind of the anti-market government, which would contribute to the further boom. And I also want to note that the Fed rate cut, which was expected even before yesterday, is also an important factor behind the rise of the KOSPI index these days.
I see. And on the campaign trail, what President Lee Jae-myung said was that he'll lift the KOSPI index to 5,000 points and get rid of the so-called Korea discount. Do you think this is a realistic goal he can achieve during his term?
I hope that the current government can remove the Korea discount as soon as possible, but whether it can be achieved that soon or not is not so sure at this point. In order to elaborate my comment, let me point out three main factors behind the discount. The first is a geographical risk. Given that investors require compensation for holding the risky assets, and the probability of the war in Korea is not zero, it is not surprising that we still have the discount. And the second factor is the corporate governance structure in Korea. So it has been pointed out as one of the major problems in the Korean economy. And given that market investors put more attention on the so-called ESG, it is natural to expect that the government issue in Korea would be the factor to lower the value of the Korean stocks. And the last one is the low dividend ratio, because the dividend ratio in Korea is lower than the other competing countries, and it has also contributed to the lower stock prices in Korea. And if you think about all these factors together, I think these problems are not that easily resolved in a very few years, implying that the funds and the government need to put more efforts to change the market structure in the long run. So I think it will take some time to achieve the target, but I really hope that it can be achieved very soon.
Right. And the KOSPI also opened higher after the U.S. Central Bank lowered key interest rates yesterday, like you briefly just mentioned. And the Fed hinted at 2 more rate cuts throughout this year. How might these changes to the interest rates in the U.S. affect the South Korean stock market?
Yeah, it will definitely affect the Korean stock market, and actually as well as the other countries, maybe in the favorable direction. Stock prices might increase further for a while. Most of all, the financing costs of the U.S. investors would become lower, and the interest rate spread between the safe asset and the risky assets like the Korean stocks. And with the further expected decline in the interest rate in the U.S., the demand for the risky asset from the sort of carry trade would further increase, which can potentially raise the stock price further if there is no other changes like the geographical risk or the others as I pointed out.
I see. And looking ahead, how might the U.S. rate cut influence the Bank of Korea's decision on South Korea's interest rates?
Yeah, I believe it will help the Bank of Korea to potentially cut the interest rate. Because of the pressure from the president and not so bad inflation rate observed these days, there can be more rate cut by the Fed in the near future. And this can alleviate the concern of the BOK that the future interest rate cut in Korea might result in capital outflow due to widened interest rate gap between Korea and the US. And the inflation rate in Korea, which is the most important factor when deciding the interest rate, has been stable over the last few months. If you look at the data between June and August, the inflation rate has steadily declined from 2.2% to 1.7%, which is now below the target inflation rate of the Bank of Korea. And it seems that such trend will continue, and that gives more room for the BOK to lower the interest rate if they really think it's necessary, which can intensify the effect of the Fed rate cut on the BOK's decision.
I see. I guess we'll have to keep a close eye on the Bank of Korea's decision next month. All right, Professor Shim, thank you so much for your insight today. We appreciate it.
Thank you.